Pablo, good to see you. How you doing? First one as usual. Evening, Miles of CMF. Joe, good to see you as well. How you doing? Good evening all. JP, good to see you as well, brother. How you doing? How you been? How's everyone doing today? How's everyone's weekend? Hoping it was good. We're going live at the same time CoinDesk is going live. This should be interesting. Evening, Miles of CMF Talk. Good to see you as well. How you doing? Good evening, brother Miles. Funky brother. Good to see you as well. How you doing? Good evening, Miles of CMF. Free and Feather. Good to see you as well. How you doing? Into profile, yes. Hey, brother Miles of CMF. Kumatus, good to see you as well. How you doing? Mike, good to see you as well, brother. How you doing? T. Hello, Miles. Good to see you as well. How you doing, T? How's things? Good evening, CMF. Let's go, funky brother. Okay, let's do intro, disclaimer, and what we're going to be going from tonight's live. But that's everyone's tuning in for the first part of the live. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space, which we're not that far off, to be fairly honest. I mean, regarding the news that's happening around the world right now, every country is getting much more closer to this digital ID, digital carbon footprint, or digital wallets, and so on, which we're going to talk about a little bit on tonight's live as well. But mostly we're going to go through essentially regarding the government shutdown on tonight's live. We're going to talk about some perspective news, some partnership news, some announcement news, some crypto treasury news, and obviously some Ripple news to go through on tonight's live as well, as always. Now, the disclaimer of this live is, as always, never changed. Not financial advice, not political advice, and whatever I say is only for entertainment purposes. And I want to take essentially a few seconds just to say honestly, thank you so much to everybody who has already liked and retweeted this live and put a comment outside the live, hashtagging XRP, Trump, or whoever you want to hashtag, or whatever crypto project you want to hashtag. Honestly, thanks so much to everybody who has already liked and retweeted. Still, the likes and retweets are coming in. Let's go CMF. And also, if you're watching this on YouTube, thank you so much to everyone on YouTube who's watching right now also who has already liked the live and put a comment outside the live as well. Now, the first news, as I said, we are going to be going through is regarding the government shutdown situation, which is weighing in quite a lot on the market space because, you know, we got to understand what could possibly happen next if we do go into a government shutdown, which is still the main subject. Now, today also Trump is having a closed door meeting essentially with some members regarding this government shutdown situation to not let it happen. Now, before we go through the first news, let's go to the comment section first, and then we go straight into the first news. And this is episode 382 of the CMF Live right now, which is incredible. One episode 382. Now, let's see where we're at. How have you been? Funky brother, I've been doing good. My weekend was good. My day was good. Life is good. What about you, Miles? Let's go, JP. Life is good. Day was all over the place, and weekend was good as well. Kamal, good to see you as well, brother. How you doing? Hi, Miles, CMF group. How you doing today? Carlos, good to see you as well. How you doing? Good evening, Miles and CMF. Bull XRP, good to see you as well. How you doing? Hi, Miles, CMF. Stormy, good to see you as well. How you doing? Like and share the live. Let's go, Do. Facts. Good evening, Miles. How are you today? I'm doing great. Good to see you as well, Michael. Don, let's go. Hi, Miles of family. Alex, good to see you as well. How you doing? So, the first news on tonight's live regarding this whole government shutdown situation. Government shutdown crisis essentially looms in the US right now. And basically, here is a little update essentially of what's happening so far regarding the government shutdown situation, because it would have implications on the crypto market, the stock market in general. It could be the world. So the US federal government is at risk at shutting down essentially on Wednesday, October 1st, 2025, if Congress fails to approve the new budget. Now, I explain who is against the new budget and who isn't in essentially on Friday's live show. In the ongoing essentially budget negotiations between the parties, Republicans have proposed extended essentially current spending levels until November 21st. While Democrats essentially have offered a proposal that will impose additional essentially healthcare regulations and limits President Trump's ability to block the funding. However, these conditions are unacceptable to Republicans, and essentially between the two sides of Republicans and Democrats, it's actually increasing the likelihood of a government shutdown because neither party could agree with each other. At the end, we will be taking the massive L, not these two parties, to be fairly honest. Congressional leaders will reportedly meet with Trump at the White House today to seek some sort of a solution. So Trump is having a closed door situation right now to come to some sort of a solution so that we don't have a government shutdown. A government shutdown occurs when Congress fails to approve necessary funding for the federal agencies. The Treasury Department is prohibited by the Constitution from making any expenditures not authorized by law. Now, the Anti-Deficit Act is essentially in effect with various updates since 1870. And it requires agencies to cease operations if funding is not provided. However, services essentially intend to protect life and property, national security, and functions directly related to the constitutional process are excluded from this scope. Most federal agencies in the US are funded by 12 essentially separate budget bills passed by Congress each year. Although the new fiscal year begins on October 1st, no budget bills have yet been intact this year. Thanks to the sweeping spending package previously passed by Republicans, some agencies, essentially particularly the Department of Defense and the Department of Homeland Security, will be able to continue operating during a shutdown. There have been 14 government shutdowns in US history since 1980. The longest occurred in 2018, lasting 34 days of government shutdown. If the current impasse essentially is not resolved, the country could face one of the most critical budget crises since 2018. So, if that happens, then the market could go two ways. One, the stock market and the crypto market could be in shock. And if they're in shock, then the market is going to go down. Maybe because people don't want to spend money on riskier assets, which means essentially we see that negative inflow happening on the crypto side, the stock market, and so on. The alternative, let's say we do have a government shutdown, but the market doesn't go on a downtrend. It actually starts to pick up. The possibility of that happening could be slim. However, if that did happen, it would probably be on the basis of, well, essentially alternative methods are not doing too great, and that people might run to essentially alternative market spaces, or they could just run to gold as they usually do, to be fairly honest. So we would have to really see how that plays out regarding the government shutdown. That's if we do have a government shutdown. If we don't have a government shutdown, then things will just move off as they normally do. And this is quarter four. So in quarter four, we don't really want a government shutdown because we don't know how it's going to play. Is it going to play out positively or negatively for the crypto market space? It's more on the side of negatively than positively, but you can always have the outcomes essentially. As I've always said before, you should never have one outcome of how the market could play and it can only play out like this. No, multiple outcomes is always the better solution. Some have a higher chance, some obviously have a lower chance, but we'd have to see honestly how it plays out. Is Trump able to close this deal and get the Democrats essentially to the table to have some sort of a solution? We will know by essentially we get to the date of October 1st. Now, moving on essentially from the government shutdown situation, that must have been weighing on people's heads because everybody wants to know, are we going to have this government shutdown? If we do have it, what could possibly happen? Now you have two outcomes of how it could play out. So, the SWIFT essentially is what we're going to talk about now. SWIFT has essentially got itself another partner. Before we talk about that, let's go inside the comment section first. I want to see what's happening inside the comment section, and then we'll go straight into the SWIFT news. We're going to go back and forward in Q&As essentially on tonight's live. As always, this is live, so which means if you do have any questions or statements, put it down inside the comment section. I'm more than happy to help you out. So let's see where we were at inside the comment section. We were at here. Hi, Miles and family. Alex, good to see you. How you doing, Alex? What is the government shutdown? Is it a yearly event? It's not a yearly event, no. They're just trying to pass budgets, essentially, which they haven't passed any yet so far. The Democrats and Republicans don't see eye to eye. The Democrats just like the idea of Trump failing, so they won't sign anything. The Democrats want more health budgets. The Republicans really just want to pass this bill and get it over with. Good evening, Miles. How are you, brother? I'm doing great, Cali. Good to see you. How you doing? Morning, Miles of CMF. Shelly, good to see you. How you doing? Could a government shutdown cause a black swan event? Yes and no, up to a certain extent, because a government shutdown, it's not, the entire essentially the US is going to be shutting down. It's just parts of the government that will be shutting down. So it's not the country is just going to, like, pull the plug. In that sense, it's a yes or no type of scenario. Could it stir a black swan event? Yes. Also on the side of no, because we don't know how long the government shutdown is going to be lasting. The government shutdown might last a few hours or a few essentially days or weeks or months. So it depends on how long essentially lasts. I mean, the longest that we had a government shutdown for was essentially back in 2018, when the government shutdown lasted 34 days. That's a long time for something like a black swan event could possibly happen within. But this one, we don't know. If the government shuts down, it could be a couple of hours, it could be a couple of days, it could be a couple of weeks. We don't know how it's going to really play out. So we'd have to see. So that's why I say regarding a black swan event on a government shutdown situation, it's a yes and no type of scenario, just depending on the length of the government shutdown. If anything wants to play out in that moment in time. Miles, have you heard of Tunis? What about it, Alex? Jason, evening, Miles and CMF. Good to see you as well. How you doing, Jason? How you been? Happy Pisces. Good to see you as well. How you doing? Now, Swift. Last week, we heard Swift essentially is going to be doing some sort of testings on Linus blockchain. And then now today, we're hearing Swift partners with Consensus for blockchain prototype. Ironically, Ripple is also a partner of Consensus. Swift has partnered with Consensus to develop a blockchain-based prototype utilizing Ethereum's Layer 2 for cross-border financial messaging and asset transfers, essentially involving over 30 global banks. This collaboration aims to enhance settlement efficiencies across regulated assets and leveraging Ethereum's blockchain infrastructure, potentially impacting the financial sector's operational dynamics. Swift and Consensus have announced a collaboration to create this new blockchain, essentially based prototype. This initiative involves over 30 banks, including JP Morgan, HSBC, and they are aiming for instant 24/7 settlements and enhanced operation efficiencies. I don't know why Swift keeps on insisting on using alternative methods when the best one is there, and it's the XRP ledger. But hey, if Swift wants to keep on looking around for alternative messages, such alternative blockchains, and we're going to keep on hearing the new Swift partners with this and this and this and this, and none of them turn out to be Ripple, well, it's their own fault if they do go essentially, and then Ripple just goes up. Swift and Consensus have announced this collaboration. Swift, a leading financial messaging network for the Steam engine, and Consensus, known for Ethereum's development, are pivotal in this essentially partnership. They utilize Linear and Ethereum Layer 2 solutions to realize efficient cross-border essentially financial messaging and tokenized asset transfers. Javier, essentially, of Swift, remarked that this project aims to evaluate the payments experience through digital transformation. The rigorous involvement of global banks signifies the industry's confidence in blockchain technology, potential for increased efficiency and transparency. While this pilot remains in its early stages, the involvement of major financial institutions suggests a significant shift towards blockchain integration in the traditional sense. Previous pilots have affected Ethereum and similar ecosystems by validating blockchain transformative essentially capacities. Now, as Javier, essentially the CEO of Swift, noted, the ledger concept will allow financial institutions to evaluate the payments experience by leveraging Swift's proven and trusted platform for digital transformation. I don't know what platform they're talking about, but Swift doesn't really have a digital blockchain trusted platform in any sort of sense. Experts, in fact, Swift essentially said for the longest time, they don't understand the idea of blockchain. For the longest time, long time ago, when it was early days, Swift said, we're never going digital. There's no point going digital. It's never going to work out. And Ripple kept on expanding in the banking fields and the financial sector. And at one point, Ripple was able to get its name alongside Swift in essentially a document from the Bank of International Settlements, which is public essentially information. Everybody could go and check out that document, where it states cross-border essentially payments at the top of the essential title of the document. It's the Bank of International Settlements document, and then Ripple essentially was listed alongside Swift on the Bank of International Settlements PDF document for cross-border payments. Straight after that, Swift comes out essentially and says that we're looking at the blockchain, we're going to be working on Ethereum. Before that, they couldn't care less about blockchain. It does remind me of the whole Blockbuster and Instagram, essentially the Blockbuster and essentially Netflix scenario, to be fairly honest. Swift being essentially Blockbuster and Netflix essentially being Ripple. Now, this pilot follows essentially Swift's previous experiments with blockchain networks for tokenized asset transfers also. The trend indicates increasing competitiveness with Ripple as both aim to optimize cross-border payment solutions through distributed ledger technology. Experts essentially are suggesting that the long-term success of such a collaboration could revolutionize global banking systems. And historical trends do show that institutional backing typically leads to broader adoption and integration of blockchain solutions and financial services, which is absolutely facts. CMF, block on YouTube. Can you spam the chat essentially with W's, fire emojis, rocket emojis, and so on? Because there's an idiot inside the comment section, which I've just removed him from ever commenting on this live in his entire lifetime. Can you just spam the chat essentially with rocket emojis, fire emojis, XRP, whatever you want to go for, so that that isn't the first comment everybody gets to see. What an absolute idiot, that person, whoever he is. Now, Ukraine essentially is what we're going to talk about next. Moving off essentially SWIFT trying its best to stay relevant. As I said previously, SWIFT's biggest downfall is, in fact, essentially that's a political tool, not really a messaging standard. It goes around in sanctions countries, hence why BRICS nations decided to move away from SWIFT. So it doesn't matter, as I said previously, if SWIFT partners with Ethereum, Chainlink, essentially AVAX, Solana. SWIFT could partner up with 1,000 blockchains at one time if it wanted to. Nobody really wants to use it, not because it's slow and expensive, mainly to do with essentially being a political tool where it essentially goes around in sanctions countries. Well, it's ordered to go around sanctions countries. Hence why BRICS nations decided to just move away from SWIFT, essentially. And that's why the XRP ledger is just a better one, because it's natural. It's a neutral asset in that sense. Now, Ukraine is what we're going to be talking about next on tonight's live. Ukraine has just become the 4th largest government holder of Bitcoin. A country where essentially it's a war pretty much 24/7 with Russia. Zelensky used to go around begging for money from essentially the EU, the United Kingdom, and the US, and Canada, and Australia, and a few other countries. Now it's the 4th largest Bitcoin holder in the world as a government. That's an interesting play. It seems like essentially Zelensky has been investing the money he's been getting from all these nations. Ukraine has become the 4th largest government Bitcoin holder with 46,351 Bitcoins worth approximately $5.33 billion, primarily from the public officials' declared reserves. This strict move aligns with the national legislation essentially advances. Ukraine's significant Bitcoin holdings underscores its proactive integration of cryptocurrencies into the national essentially reserve, guided by their recent legislation. This move positions Ukraine among the top government BTC holders globally, affecting geopolitical cryptocurrency strategies, which is extremely odd because Zelensky goes around and wears the exact same clothes every day and begs for money, but then somehow his country's, essentially his government, is the 4th largest Bitcoin holder. Where did all that money come from, Zelensky? The passage of the bill, essentially number 10225D, marks essentially a significant step towards integrating cryptocurrencies into our national economic strategy. The member of the essentially Verkol, the Ukrainian parliament, the country aiming to stabilize and innovate its national essentially assets, now holds 46,351 Bitcoins, making it the 4th largest essentially country globally. This move is a part of Ukraine's strategy to bolster their reserves and integrate digital assets. Ukraine's public officials report the reserves, reflecting that essentially on the official essentially strategy to include cryptocurrencies in their national essentially assets. The legislations have already been passed as well. Immediate impacts include Ukraine's increased prominence in the global crypto market space. The reserves are viewed essentially as a strategic asset for post-war recovery and innovation. So Zelensky is basically saying that we're going to use the $5.33 billion worth of Bitcoin that they have for post-war scenarios. So the war comes to an end. Zelensky has $5.3 billion to rebuild his country. Let's all pretend that's going to be happening. And essentially, the cryptocurrency legal status and tax frameworks enhance regulatory clarity, aligning with the EU standards. Financially, Ukraine's decision may impact Bitcoin's perception among other governments and encourage essentially broader adoption. Socially, it positions Ukraine as a crypto-friendly nation, attracting essentially investments from fintech innovations. I don't know if this is the best idea to essentially start investing into a war zone. Changes in regulatory frameworks trigger essentially reserves usage and increased market influence of potential outcomes. Historically, the move essentially aligns with Ukraine, with their nations like El Salvador, who, although essentially on a larger scale providing infrastructure for crypto-based economic resilience, Ukraine's essentially regulatory clarity and asset integration strategy may inspire other nations, potentially influencing global cryptocurrency policies, utilizing streak essentially Bitcoin reserves for economic stabilization and innovation reflects long-standing economic stability and marks essentially Ukraine as a forward-thinking crypto hub in the financial landscape. You know, one thing I will give Ukraine 100% is that even though Ukraine is in a 24/7 war type of scenario going on over there, they're still more ahead than certain countries when it comes to crypto regulations. Now, we have had the UK slowly start taking baby steps into the crypto scenes, which is brilliant to watch. But Ukraine is in a war zone, and they've passed more crypto laws than countries that aren't in a war zone. That should tell, other nations to wake up, that if Ukraine is in a war scenario 24/7, they don't know if a missile is going to be striking them or not, they're still passing crypto regulations. And there are countries that aren't in war zones. For some reason, they're moving at a snail's pace. Now, Binance is what we're going to talk about next on tonight's live. Before we talk about Binance, let's go inside the comment section. By the way, thank you so much to everybody essentially inside the comment section who has went absolutely wild with the emojis. Let's go CMF. Thank you so much everyone for that. Let's see where we're at inside the comment section before we go through the next news on tonight's live. Are the XRP ETFs automatically going to be accepted on October 21st? Interesting question regarding XRP ETFs. Are they going to be automatically accepted? As far as I'm aware, and the SEC has told everyone to withdraw their applications and reapply under a new applicant. So I don't know if they are going to be passed automatically at that particular time because they have to be withdrawn and then reapplied, or can they reapply in a way where the dates still continue forward? And so we have to see, honestly. And Europe and England will keep giving Ukraine more money. Interesting enough, yes. How are you doing, Miles and CMF? Lena, I'm doing great. Good to see you as well, Lena. How you doing? But it is very odd how Ukraine, Zelensky goes around and begs for money from every country. Somehow, Ukraine's government now has $5.33 billion worth of Bitcoin in storage. Makes no sense for a country that claims to have no money and needs a lot of help. Binance, something's going on there. Either that or essentially Zelensky's got a very good accountant. Binance is what we're going to talk about next on tonight's live. Binance is launching essentially a crypto as service for institutions. It's a new service that Binance is offering, and I think it's quite innovative, to be fairly honest. Binance launched its crypto as a service platform, targeting banks, brokerage firms, and licensed exchanges to offer crypto trading services with integrated compliance. The launch aims to lower barriers for traditional finance institutions, potentially increasing essentially the institutional crypto adoption usage, with Binance Coin experiencing a surge post the announcements. Binance has officially essentially launched its crypto as a service platform. The service targets institutional clients, providing turnkey solutions for crypto trading, custody, and compliance. Key figures include CZ and Binance's executive team. Institutions can now integrate this branded trading essentially platforms listed by Binance infrastructures. The market swiftly essentially responded to the announcement as BNB Coin essentially increased ever so slightly. The launch strengthens Binance's position in the financial service sector. It offers institutions the ability to deliver a bespoke trading essentially experience while leveraging Binance's established compliance and technical infrastructures. This essentially initiative bridges a crucial gap between traditional institutions and digital assets, marking a significant shift in the financial service offerings. Historically, attempts at a similar financial integration faced compliance challenges. Binance leverages essentially its global infrastructure, promising streamlined operations, and this development showcases Binance's strategy to dominate the institutional crypto markets, as essentially noted in their official blog. This is what Binance's official blog said. I'm just going to give you a little segment of it. Essentially, with crypto as service, Binance Institutional essentially lowers the entry barrier for traditional finance, enabling partner brands to offer spot and futures trading, asset trading to their clients with full compliance, liquidity, access, and secure custody. Institutions can deliver a branded client-facing experience with Binance manages the technical, essentially regulatory and operational complexities behind the scene. I think it's a brilliant idea to essentially expand inside the market space, because Binance might not have some regulatory compliance in different jurisdictions, but through this, they could possibly have that essentially, and it brings more liquidity to the table, not overnight, but over time. In a sense, I think it's very innovative what Binance has just done. Now, moving on from Binance to Coinbase. Brian Armstrong has come out today and said that essentially the Senate shouldn't be bailing out the banks. Now, what essentially Brian Armstrong means by that is that the Senate might essentially has favored essentially the banks in one particular scenario against crypto, which was yields, essentially crypto rewards. You see, the banks have a massive fear of a bank shutdown or a bank run, because not only do cryptocurrencies offer essentially some sort of rewards and staking rewards and so on, also so do stable coins. And that is a big no for the banks, because then people will start taking out their dollars, pounds, euros from their bank accounts and just using digital pounds, digital euros, digital dollars, because they can actually earn on their stable coins. They can earn on their pounds and euros, and they don't have to move it to alternative cryptocurrencies to earn that. They can just earn it on their fiat, but in a digital sense. And that was not good for the banks. So the banks decided that essentially to pressure the Senate to remove that from the Genius Act, to not let people who hold stable coins earn some sort of run, essentially any type of rewards. So a bank like JP Morgan, with billions under its belt, didn't want the average Joe type of person to earn just a little bit of money on top of their USDT or USDC or USD, because that is just wrong. And that's, for some reason, the banks didn't like. I mean, I understand why the banks didn't like that, because they thought over time, money will start exiting the banks and going essentially to stable coins. And yes, that is bad for the banks, but it's good for us. But unfortunately, in this world, we always come second, and them, or they, essentially always come first. Now, Brian Armstrong, essentially Coinbase, escalated its fight with TraderFi, doubling down on its lobbying efforts and accusing the banks of trying to protect their monopoly. 100% I stand by essentially the CEO of Coinbase, and I respect the CEO of Coinbase so much for taking it upon himself to essentially go up against the banks and say, well, this is just wrong. You guys have too much of a monopoly going on. So today, the Coinbase CEO, Brian Armstrong, posted on X while in Washington, D.C., lobbying lawmakers on stablecoin regulations. I've never been more bullish about clear rules for crypto. It's obvious that the market structures essentially is freight train that this left the station. But that hasn't stopped the big banks from coming for another handout. This time, paid by your crypto rewards. They want to undo your rights inside the crypto space. Brian Armstrong spoke essentially from Capitol Hill while the US Senate deliberated essentially on the Digital Asset Market Structure and Investor Protection Act. This essentially piece of legislation clarifying that crypto rules beyond those covered by the Genius Act will determine which agency is in charge of crypto regulations and extended their investor protections. I've never been more bullish about clear rules for crypto. It's obvious that market structure is a freight train that's left the station, said Coinbase CEO Brian Armstrong. But that hasn't stopped the big banks essentially from coming after your handouts, this time paid by your crypto rewards, he added. According to Brian Armstrong, banks are trying to essentially reinitiate the issues that were already settled with the Genius Act. Notably, he says that banking lobby is coming after stablecoin rewards. Banks want to ban rewards to maintain their monopoly, and we're making sure the Senate knows bailing out the big banks at the expense of the American consumer is not okay. Stablecoin rewards are essentially a continuous regulatory issue. Under the Genius Act, stablecoins are not allowed to pay interest. However, they are allowed to pay rewards, which some in the banking sector consider it a loophole, because it is a loophole, but it's a loophole for once in our lifetimes that's an advantage to the average Joe. Notably, banks fear the stablecoin rewards could cause a capital flight from the banks. What is more, according to essentially the April Treasury Department report, consumers might move as much as $6.6 trillion out of the banks into stablecoins, potentially threatening the bank's ability to lend. So, billion-dollar banks are trying to take the small reward you could have earned from your stable coins because they're that afraid. See, this is why in a digital world, it's going to be so much better that the banking monopoly is, over time, not overnight, but over time, the banking monopoly should be wiped out. Because we don't really need bank accounts in a digital world. If I can make a transaction, if you can make a transaction, wallet to wallet, all around the world, then we don't need bank accounts. So even if the banks want to take away our small reward we could have possibly got from USDT or USDC or USD, they want to take that away. I hope more people start to wake up and realize that you should just be moving off the banks anyways. Because even if the banks want to take your rewards, you're still better off sending money wallet to wallet than staying with your banks that are that greedy and they can't essentially even bear it for you to earn a small reward on your dollars, pounds, euros, yen, whatever you may have. So I just hope that over time people do realize that even if we can't get the rewards on stablecoins, it's still better off to be in a digital world and not have this banking monopoly control us and essentially take away the smallest reward we could have possibly earned from stablecoins. So now, before we go through the next news on tonight's live, which ironically is about JP Morgan, let's go inside the comment section first, and then we go straight into the next news on tonight's live. Let's see where we're at inside the comment section. As I said previously, this is live, just like always. If you do have a question or comment, put it down inside the comment section. More than happy to help you out. So let's see where we are at inside the comment section. We were at here. I think for this artist, Zelensky, one Ukraine or Russian life is equal one BTC. We will see alt season, yes, but a lot of factors are in play, to be fairly honest as well. But yes, we should be still seeing Q4, but so many things are happening at the same time. The Clarity Act is the most important act we could possibly pass for the crypto sector because, in the words, it brings clarity towards the crypto space. SEC knows what they're doing. CFTC knows what they're doing. No more, not as in zero gray areas. Some gray areas will exist, but the majority of gray areas will completely go away because the banks institutions then know what to do with the Clarity Act in place. So that is the most biggest positive thing we can have pretty much this year, going slowly towards that utility section that we want to do inside the crypto space. So that's still in play, but there are other factors in play that are making the market quite volatile, especially one being this whole government shutdown situation. Even Mouse and Tangent, Even Mouse, how you doing, Paul? Good to see you. Is Tangent a safe storage, and what's the best way to get funds off it? We don't want to take profit, as they say exchanges will block movements post ETFs, etc. Regarding exchanges essentially blocking people from taking their money, sometimes, I mean, I wouldn't say it's exchanges are doing that on purpose. Sometimes it can be server issues and so on. The times are a bit odd, I'll be very honest. But is Tangent a good wallet? In my opinion, yes. Not financial advice whatsoever. Tangent essentially a Swiss company. In my opinion, it's the best. I mean, they created a card where you can only essentially send and receive money, cryptocurrencies, on your Tangent wallet. You're using the Tangent card. The Tangent card, the reason why it's great as well is because you don't need to charge it. It's not like Ledger, essentially, where you have to charge your device or any other device out there. The Tangent card has a Samsung chip inside of it that works for about 25 years. 25 years, no charge needed, and the Samsung chip is inside that card. You tap that card to receive crypto. You tap that card to send crypto. If your phone gets lost, nobody can make a transaction. Nobody can access your account. Nobody can open your account. Even if the hackers are able to open your Tangent app for some odd reason, they still can't make a transaction because you hold the Tangent card. So, in my opinion, it's one of the safest, or the safest, I would have to say, without a doubt, inside the crypto space. Definitely by a mile, Tangent wallet. And I am also sponsored by Tangent, not to sound biased. If you do want to get a Tangent wallet, you could use my name in capitals, Crypto Miles, and you get 10 to 20% off how many orders, whatever you want. It's not just your first order, you could be for your 10th order as well. You could use my name, Crypto Miles, in capitals, get 10 to 20% off. But my mile, yes. And I use all. So I don't just have Tangent, obviously I have a Ledger and so on and so on. But the idea of not having to charge that device is the best part about it. Now, hi, Miles and CMF. Good to see you as well, George. How you doing? Greetings, Miles and CMF. Hope all is well. Ray, good to see you as well. How you doing? It's all about the words, me and you rewards versus interest. Same thing, different name. Yep, let's go, Kerry. So much for even playing field with the banks taking stablecoin rewards. Fair enough. I mean, honestly, not to mention they block your accounts at any time for no reason. Absolutely facts, what has Shelley said. Regarding the banks, I've seen so many instances online where people are posting their interactions with their own, essentially, banks. You know, they're trying to take money out the banks, and it's happening all over the world, to be fairly honest. A lot is happening in the US as well, in that sense, where people go into the banks, try to take their money out, and the banks won't give it to them. Mainly because we're heading so much to that digital world that they start to limit people. And also because 3 years ago in the World Economic Forum, they were talking, there's a man from the Bank of International Settlements, and that World Economic Forum event was going on about 3 years ago, 4 years ago. And this man essentially was part of the Bank of International Settlements. He's quite high up, one of the managers and so on. And essentially, you know, one of the board members, he came out and said that when we do come out with CBDCs, we have to find a way to stop people from running to the banks to take their money out. Because if we introduce CBDCs, then everybody runs towards the banks and takes their cash out. Then we can have a bank shutdown, not just in one country, but everywhere around the world. So they said, before we release CBDCs into the world, we need to get the banks the limit of how much cash you could take out. So when we do introduce CBDCs and you go to the bank to withdraw your entire bank account, you can't, because the bank has put a limit of $2,000 or $3,000, which means the rest of your money is trapped in CBDCs. So that is one of the reasons essentially why banks have done that type of scenario of, you know, limiting people as well. But yeah, honestly, what Shelley said, absolutely facts regarding sometimes for no reason they will not let you make a purchase. You know, because it's so odd, the concept of my money. You know, if you work for your own money and then you put it in your bank account and you want to make a purchase and the bank goes, nope, you can't make that purchase. You know, if you want to buy a car, for example, pay a contractor because they built your house and you want some cash from the bank, they'll just refuse you sometimes, which makes no sense. But if you have your own crypto wallet, who's going to refuse you? Nobody. This is why I say I hope more people honestly wake up and realize that we need to be moving to wallets. We honestly need to be moving to wallets, because your own wallet is not going to refuse you your own funds, but the bank is, even though it's your money, but somehow they can essentially decide what you spend your money on. So this is why I hope that people start moving and shifting their money towards wallets. Even if you just want to be dollars, pounds, and euros, you could do that using stable coins. You know, you don't have to buy, you know, XRP, XLM, XDC, HBAR, or so on. You could just use pounds, euros, and dollars, but in a stable coin sense, and you're much more better far off. I mean, to be fairly honest, how long do you think it will be before we use XRP to buy a drink in a local pub or cafe, for example? Paul, you can already use XRP to buy a drink at your local pub or cafe, for example. I use crypto essentially, you know, for purchases as well. Everybody should be doing it. I mean, there are certain essentially bank cards, not bank cards, but there are certain cards you could get from like Uphold, for example, for the time being. As we move further on, it's going to be scanning QR codes, for example, and then making a purchase where it's direct wallet to wallet. For the time being, the world, some jurisdictions around the world still haven't caught on to the idea of QR codes, which means you would need an Uphold card or a Binance card to make that purchase happen with cryptocurrencies. You can make that purchase happen already using XRP. Not recommended to use XRP to buy a, you know, a beverage or a drink essentially at a local pub. I preferably use essentially Solana if I was going to do that, but or Ethereum. But you know, that's not recommended. Again, there's no financial advice in any way, but you can use Uphold or Binance card and so on to make that purchase happen. And some jurisdictions have already moved on to QR codes. That's much more better, to be fairly honest. But now, moving on to JP Morgan. JP Morgan has came out and decided to challenge the Sell America narrative. If you're thinking to yourself, what the hell is Sell the American narrative? And why is JP Morgan challenging it? Well, JP Morgan Chase pushes against the Sell America calls, asserting that the US continued to outperform globally on growth despite market volatility and economic uncertainties influencing the investor narratives. The bank's stance challenges market sentiments and reflects broader implications, especially as financial markets and risk assets navigate the fluctuating essentially economic signals and potential policy shifts. JP Morgan Chase has challenged the recent Sell American narrative, emphasizing US economic strength. Essentially the debate emerges aimed concerns over US market stability and future growth prospects. This comes as the global investor assesses the risk landscape. The influential essentially bank maintains a positive view on the US economy, arguing against the bearish sentiments. Reports suggest that stance may influence investor decisions and alleviate some concerns over potential declines in US asset valuations. You know what's interesting about this? 6 months ago, JP Morgan came out with multiple reports in that time frame. From now, 6 months back, JP Morgan came out with a few reports. And all of those reports said essentially that the US dollar is going to collapse, the US economy is in shatters, and Trump's tariff policies are ruining America, and so on and so on and so on. And you fast forward to today, where JP Morgan is singing a different tune, saying, no, the US is the strongest economy, we're never going to fail, everybody should be investing in it, and so on. I would say it's possibly to do with JP Morgan's CEO having conversations with Trump, and then JP Morgan's CEO changed his tone, as he should do, because in my opinion, Trump has actually done quite a lot of positive things for, essentially, in terms of business inside the United States. He has brought quite a lot of, funding back to the US from all around the world, to be fairly honest. Beforehand, presidents used to, inside the US, spend US dollars outside the country. Trump is the only president I've ever seen bring money back into the US rather than spending it outside the country. Market observers have tracked significant movements in asset classes influenced by growth forecasts. Volatility in US equities and treasuries has affected essentially global investor confidence, leading to notable repositioning. This revaluation is marked by large asset reallocations, including essentially investor shifts away from US assets, and such changes could alter economic forecasts if sustained over extended periods. Historical data also does draw parallels with past US economic crises, highlighting essentially potential risk as JP Morgan signals optimism. Market participants weigh possible impacts on international finance and trade relations. Experts anticipate regulatory or policy adjustments in response essentially to market conditions. Jamie Dimon, essentially CEO JP Morgan Chase, stated, the US economy remains resilient and positions us favorably inside the global growth landscape. Very change, a completely 180 change of tone. Potential interest rate modifications by the Federal Reserve could further influence financial markets, with historical analysis informing a long-term strategy. The insights reflects the broader discourse on economic health and market adjustments pursued by financial decision makers. I've been saying for the longest time that essentially Trump is fixing the US economy. As much as CNN would tell people tariffs are ruining American lives, tariffs are, as I said previously, it's something that needed to be done, to be fairly honest. It was either to do tariffs or later on America would have been in a much more bigger situation than 2008 collapse. So they had to do tariffs from now, so that doesn't happen later on. But JP Morgan now coming out saying the US has the biggest growth, no matter essentially around the entire world. The US market is back. It's stronger than ever. That is a good thing, to be fairly honest, that somebody like JP Morgan, even though they completely did a 180, has finally came out in favor of what's happening in the US in terms of, the liquidity that's pouring in and things that Trump has essentially fixed the US in certain aspects. So it's good to see JP Morgan has said that. JP Morgan's voice, in some sort of manner, does send some sort of a ripple effect and echo towards the financial sector that, the US is back and it's stronger than ever, and everybody should be pouring inside that market space, which is good for us because stocks go higher, and Bitcoin, even though it's named digital gold, does tend to follow tech stocks. Tech stocks go up, US market goes up, tech stocks go up, Bitcoin goes up, we go up. Liquidity, more liquidity, in other words, enters the market space. Not financial advice whatsoever, and it's not overnight, it's over time type of scenario. Now, moving on from JP Morgan's narrative to SEC. Some of you might have heard the news today, some of you might have not heard the news today regarding the SEC making such a interesting and bold statement. As essentially previously said, the SEC, has proven multiple times now that they are exceptionally pro-crypto, and they are pro-innovation inside the United States, and so on. So today they came out with this new announcements, which confused people ever so slightly. So the SEC essentially accelerates the spot crypto ETF approvals with new standards. So the US Securities Exchange Commission has prompted issuers to withdraw their 19B4 filings. The 19B4 filings are all of these spot filings that was done for XRP, HBAR, Solana, Cardano, Litecoin, Dogecoin, essentially, and so on. For AVAX, essentially, the expediting the spot crypto ETF approvals for cryptocurrencies like Solana, Ripple, and Cardano. This shift promises reduced approval times and increased market activity for major altcoins, potentially altering ETF provisions and institutional crypto interactions. It goes back to what I said. So 4 or 5 months back, from now, 4 or 5 months back, continuing forward, people have asked me, essentially regarding the XRP ETFs, even a month back, even a week back, we've essentially 2-3 weeks back, we had the question as well on the live, where people were asking me essentially, why isn't the SEC approving the XRP ETFs? Why isn't it approving the rest of the ETFs and so on? And I said, it's probably have to do with some sort of a Clarity Act, or essentially the SEC is waiting for that new thing they're trying to be setting up, the foundation they're trying to be creating. Well, it seems like they have actually opened up. It seems like they have now, the SEC has built that foundation, which now they can process essentially all of the ETF filings, according to their own words, at a much more faster rate. So the reason why they didn't pass it for the longest time was for that reason that I said essentially a month back and a month before that, which is that they were building the foundation for it. They're waiting for the Clarity Act. They were building the foundation for it. And now they're telling everybody to withdraw their 19B4 filings to essentially apply for the new filings, which would expedite essentially this whole entire scenario. This shift promises reduced approval times and increased market activity for major altcoins, potentially altering ETF provisions and institutional crypto interactions. The SEC's request essentially removes previous regulatory barriers by adopting new listing standards. This accelerates the approval of spot ETFs for several cryptocurrencies. The SEC targeted issuers with spot ETFs tied to Solana, Ripple, Cardano, Dogecoin, and Litecoin, urging them to prepare for essentially the expedited approvals. So we know for a fact that these pretty much are going to be the ones that will be passing through. Immediate market reactions involve significant volatility expectations as stakeholders anticipate approvals. The move signifies increased institutional interest inside the crypto sector. Financial markets view the SEC's actions as essentially likely lowering the cost and time to market. This could essentially result in a strict shift by asset managers and investors. Previous approvals of spot Bitcoin ETFs led to market volume surges. First, essentially, when the Bitcoin ETF was passed, not much happened, and then suddenly it shot up. Same scenario with Ethereum, passed, not much happened, and suddenly it shoot up. Based on historical data, increased on-chain activity and market volumes are expected for tokens, essentially like XRP and Solana, indicating potential, essentially, future market impacts. James, the ETF specialist analyst from Bloomberg, and Eric, who are incredibly correct on their sources regarding the market space, especially the crypto market space. James came out and said the SEC can move fast if they really want to, as we've seen in the past, meaning that we could see approvals in a matter of days. But there is no guarantee of that. James is coming out. By the way, as I said previously, this is James and Eric, and people might be wondering to themselves, so what? These two guys are specialist ETF analysts. There's so many out there, specialist ETF analysts. Yes, but Eric and James, I don't know who their sources are from Bloomberg. I don't know who their sources are, but they are so accurate on timelines. It's ridiculous. When everybody said a Bitcoin ETF is never going to happen, essentially, Eric and James came out and said, nope, it's going to be happening in January. It's going to be happening within this time frame. And it happened. When Michael Saylor went on stage at the Bitcoin conference and said, Bitcoin ETFs will only exist, no other ETF will ever exist, James and Eric said, nope, Ethereum ETF is going to be essentially accepted. The next day, Ethereum ETFs were accepted by the SEC. Now, James essentially coming out and saying, with this new SEC foundation that's built, expect the ETFs. In their own words, you could be seeing approvals in a matter of days. But they're saying there's no guarantees. Obviously, they can't say it with, without the edge of no financial advice. But now they're coming out in a matter of days. Now, to be fairly honest with Eric and James, they did say Q4, these ETFs will be passed. They said XRP ETFs will essentially, in their own words, definitely passed essentially this year. But now they're saying in a matter of days. The timeline has shifted. Now, before we talk about the next news on tonight's live, let's go to the comment section first. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. More than happy to help you out. So let's see where we're at inside the comment section and we'll go straight into the next news on tonight's live. Let's see where we're at. Is Binance FCA registered yet? No. I think maybe, but they don't have full registration because we don't have a lot of things inside the Binance. We don't have access to the majority of the features, so I'll probably have to say no. Hi, Miles and CMF family. Hope everyone is doing well. Ronnie, good to see you as well. Ronnie, how you doing, brother? Long time. How you been? Hey, Miles, how you doing? Long time, brother. Jake, good to see you as well, brother. How you doing? Long time. How you been? Did you just say, in other words, there will be no XRP ETFs in October? Well, in other words, I also said, according to James, that we could be expecting those ETFs in a few days. It's not guaranteed, they said, but we could be expecting a few days. It could take a week or so for them to be refiled through realistically. Not the way the SEC set it up. The way the SEC set up their new foundation now, essentially for the refilings, essentially, it's much more essentially lower costing, faster, more effective, and that's why essentially James from the Bloomberg ETF special analyst is coming out and saying, expect approvals in a matter of days because of this. So let's see what's going to be happening. And regarding the refiling situations, let's see how that's going to be playing out as well, because are they going to refile and then continue on the same timeline, or is it refiling essentially and with a new timeline? Or are we essentially considering James's perspective, which is in a matter of days? I've seen a lot of influencers talking about wallet must be Web3 connected. Can you explain, please? Ronnie, stay away from any influencer that is telling you you need a wallet that's connected to some sort of Web3 platform, or you need a wallet that's connected to a QFS essentially scenario. All of that is a scam. 100% scam, 1 billion% scam, and whoever is still telling people to get QFS wallets, you need a new life. I'll be very honest. So Ronnie, all you need when it comes to wallets, either a Tangem or a Ledger for cold storage, hot wallet, Trust wallet, Xamon wallets, exchanges, Binance, Coinbase, Crypto.com, Kraken, OKX exchange, MEXC exchange, and pretty much that's it. You don't need to go beyond that. So if you want a cold wallet, don't go beyond, in my opinion, essentially Tangem and Ledger, and there's another one, Trezor, essentially. Don't go beyond, in my opinion, regarding hot wallets, Trust wallet, and Xamon wallet. And there's obviously the Solana wallets and so on, but they've been compromised too many times. And when it comes to exchanges, Binance, Coinbase, Crypto.com, OKX exchange, Kraken exchange, you don't need to go beyond that. Anyway, and MEXC. Now, Brazil is what we're going to talk about next on tonight's live. Brazil's finance minister essentially defends the Drex tokenization platform. Okay, thank you. I suspected that wasn't sure. Let's go, Ronnie. No problem. I'm here for you, brother. So, Brazil has obviously the Drex essentially platform, which is their CBDC, tokenization, government platform, and so on. Apparently, it became compromised. What about Trezor? Is it safe? Trezor is good to go as well. Now, Brazil's finance minister, Fernando, addressed the growing cybersecurity concerns and reaffirmed support for Drex, the country's tokenized financial infrastructure project, during a public interview. His remarks follow July's coordinated cyber attacks on C&M Software, a central infrastructure provider for the Central Bank of Brazil, which enabled hackers to steal over $140 million from 6 Brazilian banks. So the new platform Brazil set up, the government platform, digital government platform that Brazil set up, Drex, which if I'm not mistaken is based on Ethereum, has some sort of Ethereum features in it. didn't really go down too well. It became compromised and 6 Brazilian banks were robbed for equivalent of an amount of $140 million. This is why they should have used the XRP ledger, but that's what happens when you decide to cheap out and go for other alternatives when the XRP ledger is just right there. The breach, facilitated by insider essential credentials, reportedly sold for just $2,700, quickly escalated into one of the country's largest financial cybercrimes. According to the on-chain analysis, ZAC XBT, up to $40 million of the stolen funds were laundered essentially using Bitcoin, Ethereum, and Tether, no surprise there, via Latin American crypto exchanges and OTC platforms. In the light of the hack, Fernando emphasized that Drex is designed not to monitor individuals, but to streamline transactions, enforce transparency, and reduce the costs across the financial systems. He argued that the project also offers more level playing field in competition with global tech giants, while data sovereignty remains a core objective. We're not building surveillance, we're building infrastructure, Fernando said, pointing to essentially the need for secure and sovereign data centers in Brazil to safeguard essentially sensitive financial information. Public trust in centralized financial institutions is under pressure after recent breaches. Experts warn that the legacy system remains vulnerable to cyber attacks. Drex, essentially, though, a centralized token, aims to modernize financial rails and boost resilience. Meanwhile, the laundering of stolen funds through the crypto exchanges has reignited concerns over digital assets enabling financial crime, ironically being essentially USDT. It's also essentially, while blockchains offer transparency and user control, its decentralized nature can be exploited via loosely regarded platforms with limited oversight. The essentially highlights the need for regulation targeting both banking, weakness, and crypto infrastructure. Brazil, Fernando, if you're watching this, which you're probably not, just use the XRP ledger, and your country will be 10 times safer than it is right now in terms of the financial sector than you trying to use any alternative methods. I'll be very honest. Now, Citi is what we're going to talk about next on tonight's live. Citi is adding token services to a 24/7 essentially USD clearing system. Citigroup has announced the integration of its blockchain-powered Citi token services with a 24/7 USD clearing solution, marking a major step essentially forward in real-time cross-border payments. Institutional clients essentially in the US and UK can now move funds instantly across Citi and non-Citi accounts, eliminating cutoff times and enhancing liquidity management. This is the first time a global bank has deployed a tokenized infrastructure that operates round the clock with multi-bank reaches. The integration allows the clients to bypass legacy essentially friction points such as transaction delays and pre-funded accounts. The offering uses permissioned blockchains to facilitate secure, on-demand tokenized liquidity transfers, effectively bridging the gap between traditional clearing systems and decentralized technologies. Citi's move also adds flexibility for its 1,500 financial institutional clients who can now process USD payments at any time, including weekends and US holidays. Global commerce doesn't take weekends off, and neither should payments, said essentially send the Citi's head of payments. The solution reflects our continued commitment to deliver real-time infrastructure that matches the speed of businesses. Citi has been steadily building blockchain presence, processing billions of tokenized transactions since Citi launching their Citi token service back in 2024. The bank now operates in the US, UK, Singapore, and Hong Kong, with expansions essentially of plans in motion for other regions. The timing of the announcement may not be essentially coincidental. Earlier this week, Citi published a research report forecasting the stablecoin market space to reach $4 trillion by 2030 in a bullish scenario. However, it also warned that stablecoins might face headwinds from bank-issued digital tokens, which could be favored due to clearer regulations and compliance standards. Citi essentially saying that people would rather use bank tokens, essentially like JP Morgan's digital dollars, rather than people using, for example, USDC, USDT, or RLUSD. I'll be very honest, if anybody has any brain cells, you'll be much more better off not using any bank tokens and using, for example, the RLUSD or USDC, in my opinion. Even USDT, which the background of USDT is always very questionable, even that is better than essentially a bank releasing their own token, because it's the exact same monopoly continuing forward. The same banks that don't want to let the average person earn a little bit of a yield or any sort of rewards on their stable coins as an average Joe person, that bank should not be dictating your future also in a digital world. And people should just start moving away from this bank scenario, because we can do wallet-to-wallet transactions. We don't really need them in any sort of way moving forward. As long as we get essentially companies like Ripple, who's applying for that Fed Master account, that bank account, that licensing, we trust Ripple. We don't trust these banking monopoly systems that are just trying to take away any sort of reward that the average Joe could pretty much earn. The timing of the announcements may not be coincidental now. So in the report, the analysis projected that bank tokens could process over $100 trillion in annual transactions, surpassing the expectations for private stablecoins. Citi's infrastructure rollout aligns with this institutional trend while avoiding essentially the regulatory uncertainty tied to public stablecoins. As banks like Citi adopt compliant blockchain tech, the line between stablecoins and bank tokens blurs, yet the race for digital dollar dominance is clearly on. Now, I just want to clarify, Citi does not own digital dollars in any sort of way. They don't own any sort of digital dollar tokens. They just have that Citi token platform. Their token is not public. Nobody can buy it. So if you see a Citi token out there, it doesn't belong to Citi. Some scammers made it. It's just the private institutional sector right now. But people can make transactions regarding Citi. Is essentially what's happening. They're opening their doors. Now, Bitcoin is what we're going to talk about next on tonight's live. But before we talk about Bitcoin, let's go inside the comment section first, and then we'll go straight into the Bitcoin news. Thanks for answering my question. Much appreciated. You're a legend. Let's go, Ronnie. You too, brother. Now go and like and repost if you like the information Miles has provided. Facts. Let's go. If you already haven't liked or retweeted this live, CMF members, go smash the like button. Go smash the retweet button. If you're watching us on X, if you're watching us on YouTube, do the exact same as well. If you have, honestly, thank you so much to every single one of you. Okay, Shelly, I will. Let's go, Ronnie. When can we see CBDCs inside the United Kingdom? We're not that far off, Johnny, regarding essentially CBDCs inside the United Kingdom, because we have just been introduced the idea of digital wallets, or essentially some sort of, they're calling it Brit card and Brit wallet and so on and so on. So we're not that far off. When the government is essentially introducing the idea of some sort of a digital wallet, we know that we're pretty much 2, maybe 3 steps away from CBDCs being implemented. It seems October will be very interesting month regarding the shutdown of the government and ETFs getting approved and geopolitical tensions. Yeah, I agree 100%. Now, Bitcoin, the token that a lot of people would swore on a sword for and die besides the Bitcoin maxis I'm talking about. They would essentially say that Bitcoin is the most neutral asset there is out there, without a doubt. Well, some new reports have come out regarding essentially Bitcoin, which is this. Bitcoin's distribution is exposed. So this is what I came across today, and I just want to share it with everyone. Bitcoin's distribution exposed. Few holders control the majority now. Bitcoin has become an increasingly prominent part of the global financial sector. Some governments, companies, and funds now include it in their reserves. While many individuals continue to grow their holdings, on the surface, ownership appears to be widespread, with more than 54 million Bitcoin addresses recorded on the blockchain. So you assume with 54 million Bitcoin wallet addresses that it's spread out. Everybody has some sort of equal play in Bitcoin's future. Well, maybe not so much. However, a closer look shows that those numbers can be misleading, as they do not fully reflect who actually controls the assets, which is true. No sound. Miles, I can't hear you now. Before I continue forward, Everyone who's watching on YouTube and X, can you hear me and see me? Thumbs up or thumbs down? Can you hear me and see me? Because George has put inside the comment section, Miles, I can't hear you now. No sound. Can everybody see me and hear me? Thumbs up or thumbs down? YouTube and X. Sound is fine for me. Yes on X. Yes on X. Yes. Okay. Yeah. Yes. Okay, George, I think it's just you. George, go out of the live and come back in. Your sound should be fixed. I think it's just you, brother. Everybody else is putting thumbs up. Yeah, even on YouTube is yes. Yeah, George, I think it's just you. Go out of the live, come back in. Hopefully it's fixed. Should be fixed. Close the app, come back in. Now, continue forward. So, it seems like Bitcoin is not as neutral as people might have thought it is. So, however, a closer look shows that these numbers can be misleading as they do not fully reflect who actually controls the asset, which is true. We don't know that out of these 54 million essentially wallets, who it actually belongs to. It could be the same person, not for 54 million wallets, but it could be the same person for at least 100 of those wallets, or essentially 1,000 of those wallets, and so on. So Sunny, founder of the analytics platform Time Chain Index, took it upon himself to do some sort of research and do some sort of review as an analytics company. And this is what he came back with. Reviewed blockchain data to measure how ownership is distributed. His analysis revealed that most of the supply is concentrated in the hands of a very small group. Out of the total addresses, only 18,695 are classified as whale wallets. Put together, they control more than 60% of all Bitcoin in circulation. Out of 54 million Bitcoin wallets, 18,695 of those wallets control 60% of Bitcoin circulation. A significant portion of the addresses also belong to institutions rather than individual users. Of the 54.4 million addresses, about 271,883 of them are linked to exchanges and custodians. It gets worse. Companies, ETFs, and miners. Together, these pooled wallets hold around 8.7 plus million Bitcoin, or roughly 44% of the total supply. Since they represent their funds stored on behalf of many clients, they do not reflect the essentially individual ownership. But the whales, 18,000 of those wallets, pretty much control 60% of the network. After removing institutional and pooled wallets, the remaining address still reveals how Bitcoin is distributed and which holdings are significant. The leftover addresses collectively held 11.1 million. Contained only a very small fragments from early transactions. To focus on meaningful balances, Sunny excluded wallets holding less than 0.001 Bitcoin and also removed those links to companies and custodians. This essentially reaffirmed and left 23.43 million addresses, which together control 11.1. Based on this filtered dataset, Sunny noted that the total number of wallets does not reflect the number of individual users, since most people control multiple addresses. Taking an average of 6 addresses per person, he estimated the network likely has around 3.9 million active users, who collectively hold the majority of Bitcoin outside the institutional wallets. This shows a raw figure of 54 million addresses creates a distorted picture of adoption. Because when you look at it, you think 54 million Bitcoin wallets and everybody has a piece of the pie and everybody has a voice when you own Bitcoin. But you don't. Because only about 18,000 of those wallets are pretty much running the game. While whales hold a dominant share and custodians manage nearly half of the supply, the filtered essentially data set gives a more accurate view of genuine network participation. Even then, the actual user base is so far smaller than the headlines address count suggest. Meanwhile, Bitcoin is trading around $111,000, up about 2% in the past 24 hours. Glassnode recently reported that the accumulation trend score has softened, reflecting a more cautious approach from larger holders. If demand does not pick up, the market could face additional pressure from available Bitcoin supply, leaving prices exposed in the near term. So, Bitcoin maxis will tell you that Bitcoin is the most neutral asset out there, that everybody has a voice if you hold Bitcoin. Michael Saylor will always tweet out to the average Joe, you should be holding Bitcoin, you should be buying Bitcoin. But then out of 54 million wallets, 18,000 of them are pretty much running the game. 54 million wallets, 18,000 are running the game. And people will say Bitcoin is the neutral asset. It's the everybody has a voice token. Seems like 18,000 of them have a voice. The rest of the 54 million don't really have a voice. Now, Applied DNA launches $58 million essentially dollars of private placements in pivot to crypto treasuries. So moving on essentially from the data that was essentially revealed of the neutral asset, which tends to be not so much of a neutral asset, because Bitcoin maxis will always try to pick on the essentially XRP side and say, well, Ripple owns a certain amount of XRP, but the entire Bitcoin network is run by 18,000 wallets out of 54 million wallets. So there's not much to say there, is it? Applied DNA Sciences has agreed to a $58 billion private investment in public equities and named a new chief executive as it plans to become a digital asset treasury. And that will also explain why the market is tremendously, when it comes to Bitcoin, manipulated. Because if 18,000 wallets are running the show pretty much, that definitely does show, out of those 54 million wallets, why essentially when it comes to Bitcoin is tremendously manipulated. So, a private company essentially, a company essentially in science has decided to, a DNA science company has decided essentially to enter the crypto side and creating crypto treasury. They didn't go for Bitcoin, which sometimes seems to be the 10 trend because everybody's following MicroStrategy. They decided to go for BNB. The Stony Brook, a New York company which has operated as a biotech company, said essentially today that it wants to pivot to a treasury strategy based on BNB, a native cryptocurrency for obviously Binance's blockchain system. It plans to use the funds from the placement to acquire BNB and will change its ticker to BNBX on the stock market to reflect its shift to a treasury company. Judy, the voluntarily essentially resigned from her role as president chief executive. Clay essentially has been named her successor. He previously served as chief legal officer at the present company of Linux, essentially RX subsidiary, has applied DNA plans to have essentially Anthony Schumer and essentially JR essentially lead the to-be-formed crypto strategy advisory board, which after formation will add other leaders inside the crypto sector as well to their team. But they have now become a BNB company. Applied DNA has secured commitments of $27 million so far in cash, stablecoin, and units of BNB Trust. It also essentially has the potential for up to an additional $31 million in proceeds for future investments of warrant exercises. The company is offering 4.73 million shares and common warrants in cash alongside 3.33 million warrants in cryptocurrencies. The warrants in both offerings will be priced at $3.82 each. The transaction is expected to close on October 1st. The company also entered a 5-year agreement with essentially Cyprus to provide an asset management service as it transitions into a treasury strategy. So, another public company that was not doing too well decided to essentially become a crypto company and decided to change their ticker, just like a few other companies have, but this one to BNBX. And essentially, if anybody, essentially is the type of person that does go for these types of assets, there's a lot of them that are there, to be fairly honest. And there was a study test done. Over 100 public companies now have some sort of crypto treasuries. 100 public companies have some sort of crypto treasuries right now. Some of those companies are failing companies that just saw that there's a lucrative market space right now. They should be jumping on to bring some money back to the table, because everybody saw how the Japanese company did it by following essentially Michael Saylor's footsteps, and went from a failing company to now being able to buy some sort of a bank in Japan. Now, moving on essentially from that news, but it is brilliant news essentially for BNB, to be fairly honest. Now, Ripple essentially is what we're talking about on tonight's live. Before we talk about Ripple, let's go start a conversation first, and then we go straight into the Ripple news. Sorry, Miles, being out tonight, I missed your live, but I will, as normal, listen to your recordings tomorrow to catch up on all the great information. Thank you so much, Addy, and no problem, brother. So is it time to sell my Bitcoin? Ronnie, not saying that in any sort of way. It's completely up to you, your money, your choice, your life, not financial advice at all. If you're not sure what to like and repost is on X, tap on the heart to like at the bottom of the live and the 2 arrows forming a square like a loop to repost. Facts. If you are somebody that doesn't know how to like or retweet, you might not know, it's completely, normal if you don't know how to like or retweet. Don't worry about it. You see a little heart under the live show, click that little heart, that means like. And if you see that, 2 arrows looping around each other like it's a repeat, that means retweet. And the other essentially image next to it is the comment image if you want to type a comment. Thank you so much, Shelly, for sharing that. Don't forget to tap the heart and the repost. Facts. Let's go, Shelly. Thanks so much for saying that as well. Honestly, once again, if you haven't liked or retweeted, please smash those like buttons, smash those essential retweet buttons, and drop a comment outside the live. If you have, thank you so much. How can I save my family from digital control over CBDC worlds? The only way to survive in a CBDC world, in my point of view, I've said it for the past 4 years, 3 years, and so on, is XRP. To survive a digital world is by going for the infrastructure of that digital world, by being a part of that infrastructure for the digital. Nobody can stop a digital world. Nobody can stop CBDCs. Nobody can stop social credit systems. Nobody can stop carbon footprints. In the UK, about over 1 million people have signed some sort of, have signed something on the lines of trying to not get this digital ID thing passed in the UK. When has any government ever said, yes, let me listen to my own people for once? Never. So it doesn't matter how many people sign. 10 million people can sign that. 20 million people can sign that. And it'll still pass through somehow. So it's just the type of world we live in. We vote for people who never listen to us. That's just how the world is. People should have realized this a long time ago. So as I've said previously, if you want to survive in a CBDC world, if you want to survive in a social credit system world, a carbon footprint world, the best thing you can do is prepare for it. And the best thing you can do is by seeing who is going to be running the show. And by a mile, it's XRP. The XRP ledger is by a mile going to be running that show. So if you want to survive in a digital world, go for the backbone of that digital world. That is how you survive in a digital world. Not by protesting or screaming or shouting or holding placards or signing forms to say I'm against this. Nothing will come from that. The only thing that will happen is you will fall behind in life as you normally would do. If you want to be for once in your lifetime at the front of the line instead of the back of the line, then prepare yourself. Go for the infrastructure of that digital world. Do your own research, understand how this world is going to be essentially evolving into what, and look at who's running the show. The projects that are going to be running the show are the projects that could pretty much save your life. Because when the time comes and they tell you to jump, if you don't have any of those projects, you're going to be replying with the answer of how high. But when they tell you to do something and you have those projects, you could say, no, thank you. I still have, XRP, XLM, XDC, HBAR, and so on. You get the picture. Now, Ripple is what I'm going to talk about next on tonight's live. But honestly, if you want to save yourself in a digital world, you have to go for the backbone. You don't go for the backbone, you're going to get left behind. Ripple, ironically, we'll talk about XRP Ledger. Ripple's vision for institutional DeFi is taking shape fast on the XRP Ledger. So Ripple essentially came up with, as they normally do on their blog posts on their own website. And this was essentially said, but I'm not going to be reading you the entire blog, but I'll read you segments of that. Ripple shared insights earlier this week that the XRP ledger has increased a leading role in the institutional decentralized finance, essentially DeFi, surpassing $1 billion in monthly stablecoin transactions and becoming one of the top 10 chains for real-world assets actively, which is very true. The company presented an institutional roadmap that reflects its long-term vision for blockchain in global markets. The plan essentially focuses on three strategic pillars: building advanced compliance infrastructure, launching a native lending protocol to expand credit access, and developing essentially privacy tools with zero knowledge proofs to balance transparency and regulatory needs. Ripple framed those milestones as essential to ensuring XRP Ledger's position as a settlement layer trusted for both crypto-native enterprises and regulated financial institutions. Institutional DeFi has crossed the tipping point from pilot projects to billion-dollar volumes, Ripple stated. Also adding, over the last year, the XRP ledger has broken into the top 10 chains for real-world assets, reached its first 1 billion plus essentially month in stablecoin volume, and cemented its role as a settlement layer trusted both by crypto-native firms and regulated financial institutions. The first phase of the roadmap has already been delivered. Significant features, credentials tied to decentralized identifiers, allows issuers to verify KYC and regulatory permissions. Deep Freeze essentially provides token issuers with the ability to restrict flagged accounts, and Simulate gives essentially institutions a secure way to test transactions. Alongside these compliance tools, protocol upgrades such as the permission decentralized exchange, escrow extensions, and the multi-purpose token MPT standard are laying the groundwork essentially for tokenized financial instruments, enabling more complex assets like bonds and structured products to trade natively on the XRP ledger. The next phase of the roadmap focuses on credit markets, XRP Ledger version 3.0, which will introduce a native lending protocol based on the XLS 65-66 framework, enabling on-ledger pooled lending, essentially, and unwritten credit. The system aims to lower institutional borrowing costs, offer new yield options for lenders, and automate loan life cycles. Ripple said early institutional participations are preparing to join once the protocol launches, indicating demand for compliant, low-cost blockchain credit markets. Ripple also confirmed privacy as the next development focus. Zero-knowledge proofs are essentially in prototype, and confidential, essentially MPTs, are planned for 2026. To enable private collateral essentially management with essential auditability, while critics say institutional DeFi may reduce decentralizations, supporters essentially argue that Ripple's roadmap shows how compliance, tokenization, credits, and privacy can align to reshape traditional finance infrastructures. What Ripple is laying out is what the world essentially needs to accept a digital world, because we have to move into a digital world where these banking rules applied, but in a digital sense, where the banking monopoly is not there, but essentially the idea of flagging, scammer accounts, so you don't send money to, a scammer's wallet by accident. So the features that the bank would have to protect you from scammers, is type of features that essentially Ripple has introduced on XRP Ledger, which is features we would need for the world to accept, okay, this is where we need to be going next. And by them essentially showing you their next footsteps. I mean, everything they've done so far and everything they're going to be doing is definitely going to be revolutionizing the financial sector by a mile, to be fairly honest. And as I said, if you want to change your life, if you don't want to be trapped in this CBDC social credit system, or in the UK they're calling it Brit wallet or Brit essentially card, if you don't want to be trapped in these types of scenarios, not saying it's a way to get out of them, because you're still going to get CBDC wallets, you're still going to be getting these digital IDs, you're still going to be getting these social credit system footprints and carbon footprints and so on. But if you have an alternative if you have an alternative alongside this digital imprisonment, if you have an alternative, especially if your alternative asset is one of the laying foundations of this digital world, you're pretty much sorted in terms of, forever, you can pretty much say. So this is why it's extremely important that the faster people essentially realize, okay, now it's when you should be moving towards these types of assets. Obviously, thankfully, since I've been doing these lives during the TikTok times, a lot of people listen to me when I used to do the CMF live only on TikTok, and then I couldn't do it anymore because TikTok doesn't like the idea of me mentioning something bad about CBDCs or something good about CBDCs or so on. They just don't like the idea of CBDCs. A lot of people listen to me back then on essentially exceptionally right now positioned pretty damn well for a great future ahead of themselves, listening to me back then when I was talking about this CBDC world that's coming for everyone, where China was the only one doing this. And I said, if you want to look where your country is headed, look at China. CBDC, social credit system wallets, and carbon footprints, and so on and so on. 50-minute cities. All of this essentially is now in play, and we're not that far off. When you have a country like the United Kingdom talking about digital wallets and a Brit card and a Brit wallet, that should pretty give you some. That should pretty much give you some sort of signals of how close we are to that dystopian type of future. And that if you want to position well, if you want to do well in life, if you don't want to be trapped in this type of scenarios, XRP, it's the foundation, in my opinion, by a long shot. XRP, the XRP ledger, is the foundation of this digital future. It's the foundation. Some people might say it's one of the foundations. In my opinion, it's the foundation of a digital world. On that note, we have come to the endings of tonight's live. This was the CMF Live. This was episode essentially 382 of the CMF Live. And the CMF stands for Crypto Mouse Family. My name is Mouse. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, regulations, and for some Q&As. The disclaimer of this live, as always, is not financial advice, no political advice, and whatever I say is only for entertainment purposes. If you liked and retweeted this live on X and put a comment outside the live, thank you so much. And if you if you liked this live and put a comment outside the live and you're watching this on YouTube, thank you so much as well. If you followed and subscribed to me during this live, welcome to the CMF. Now, before we do go, obviously, let's go to the comment section first, and then we'll call tonight. And tomorrow will be episode 383 at 10 p.m. London time, as usual, Monday to Friday. So let's see where inside the comment section before we do go. Realistically, how many? Jay Carver said if BlackRock commit early with ETFs, we should see 25 to 30 XRP before estimates do. Everybody's entitled to their opinions, what I would say to that. Hi, Miles. Richard, how are you doing? Realistically, how many years before we see the high price of XRP? Example, $100, $200 plus. Consider variable change. Thank you, Bunch Miles. Have a lovely night, family. Let's go, Lena. See you tomorrow, same time as usual. Night, Miles. Pablo, see you tomorrow, same time as usual as well. Thanks for the info, Miles. Much appreciated. Take care. Ronnie, let's go. Thank you, Miles. Good night, all. Stormy, see you tomorrow, same time as usual as well. Good night, Miles, and all CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, about the same time as usual. Great live. Thanks, Miles. Let's go, CMF. Shelly, let's go. See you tomorrow, same time as usual as well. Thanks so much. Good night, Miles, and good evening, Miles and CMF. Mickey, see you, brother. See you tomorrow, same time as usual as well. 10 p.m. long time onwards. Good night, Miles and CMF. Really great live. See you tomorrow. Let's go free and forever. Thank you so much, and see you tomorrow, same time as usual. Honestly, thanks so much to everybody who has liked and retweeted this live right at the beginning of the live or right when you join in. And thank you so much to everybody who put comments outside the live as well on X. If you're watching this, comments help a lot to essentially with the algorithm. Now, I will see everybody tomorrow, same timing as usual, 10 p.m. London time onwards, for the next episode of the CMF Live. Good night, Miles. Good night. See you tomorrow. Let's go, Mike. See you tomorrow about the same time as usual as well. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night wherever you are around the world. See everybody tomorrow for episode 383 of the CMF Live tomorrow at 10 p.m. London time onwards. Once again, disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. See everybody tomorrow, same time as usual. Love you all. CMF. See you tomorrow. Good night, Miles, and CMF group for the work. Let's go, Carlos. See you tomorrow, same time as usual. CMF, see you tomorrow, same time as usual for episode 383 at 10 p.m.